In this video, I'm going to talk about how to make your trading journey more enjoyable. You may be in a position right now where you want to learn how to trade and you're doing the best you can. You feel like sometimes you're making progress. You feel like sometimes you're not. Sometimes you feel really frustrated, and it almost gets to the point where this beautiful thing, which is trading, that seemed very sexy from a distance to be able to learn how to do it. It seemed fun. It seemed exciting, but now it might seem kind of boring. It might even seem kind of daunting. It might also seem like kind of frustrating, and it just seems like it's no longer enjoyable. In this video, I'm going to talk to you if you are a person who is still interested in pursuing trading and continuing your trading journey, but you just want to make it more fun. I found that trading became a lot easier for me, even years after I'd become profitable, after making different types of things and routines that I would do prior to my trading. And I've continued to optimize this and refine these things over the past few years. Nothing I say in this video is financial advice. You're probably still going to lose money trading, even if you listen to everything I say and follow everything you hear on the internet. Trading is unbelievably difficult, but I'm talking to you if you're willing to not quit and you're willing to continue, and you just want to find different ways to do things to eventually find something that works for you, which is a profitable trading approach. And even with a profitable trading approach, you're still going to have ups and downs. This is my free Telegram channel, which I've been running for over 6 years. I literally share all my analysis and trades live for free, and you can just join it by the first link in the description or just the pinned comment of this video. But take for this week, I'm down $10,000, and then last month I was down $90,000. Okay, this is a big losing month between Forex trading and crypto. But then if we look at it now, just in this first week, this is today, but just in the past week, I'm up $75,000, and this is just in crypto, and this is just in 1 week. Herein lies the crazy swings of ups and downs, even in a profitable trading approach. Let's talk about how to make it more fun. Take, for example, we go to a chart. This is a trade I'm in right now. The reason I took this trade is simply because price looks like it's in an uptrend. It had pulled back. I bought, and I think it's going to go up. You'll see it's a 1-to-1 risk-reward ratio. If price goes against me, I'll lose $3,000. If price goes to the profit target and makes a higher high, I'll make $3,000. That's the whole analysis. A lot of people might seem to think that I'm undermining the complexity of trading, and that I'm not giving enough credence and enough merit to the fact that trading is sometimes like a really complicated, difficult thing to do. However, what I've found works for me that makes trading enjoyable is to just keep things really simple. The way I look at it is this. When you're looking at a chart, price is literally just going to go up or it's going to go down. Now you can obsessively look over 100 different reasons and multiple different indicators and do all this different stuff to try to figure out if you think price is in fact going to go up or down. Or you could just keep things really, really simple and literally just buy at support, sell at resistance, buy during pullbacks in an uptrend, or sell during pullbacks in a downtrend. It can literally be that simple. When I started to keep things a lot simpler than what I was doing prior to that, which was a bunch of different crazy shit, you'd probably laugh at me if I told you all the crazy stuff I used to look at. When I found that keeping it simple, I was able to enjoy it a lot more because my analysis wasn't really that difficult. We could arrive at the same conclusion if you looked at this and you said, this is the imbalance of buy-side liquidity going to the upside, creating an institutional Wagyu beef fair value distribution gap, followed by the stop hunt manipulation of the institutions, which then leads you to say, okay, I think it's going to go up. Or you could just be like me, who just looks at the chart and says, hey, it just looks like it's making higher highs and higher lows. So it looks like an uptrend and it's just pulled back. So I'll buy with a stop loss below the recent lows and then a take profit at a higher high. With a 1-to-1 risk reward ratio, you're going to be right about half the time and wrong half the time. So by keeping things really simple and just using a 1-to-1 risk reward ratio, just to start while you're learning, you end up already starting with a break-even trading system. This is the beauty of simplicity. It's actually kind of fun for me to like literally spend maybe 5 seconds doing analysis on a chart, because if it's that simple, the setup's either there or it's not. You don't have to go and look at all these different time frames and go through all this complicated crap to try to see like if the different time frames and the break of structure and the change of character aligns in the other time frame with the Wyckoff upwards thrust after distribution gap and the retail liquidity being hit. You don't have to do any of that. You could literally just look at the chart and say, it's at the top of a range. I think it's going to bounce here and go down. So I'll sell at the resistance zone, put a stop loss above and a target below. If you just do this, keep in mind, you cannot predict the market. If you enter a random buy or sell anywhere on the chart and just use a 1-to-1 risk reward ratio, price is going to go to the stop half the time and the target half the time. You cannot predict what's going to happen. If you get really good at trading, maybe you might be able to predict what's happening a little bit more than 50% of the time, like maybe 55 or 60%, but you shouldn't rely on predicting the market as the way that you're actually going to be profitable. It's better to just focus on keeping things really simple because it makes things more enjoyable and fun. And then you learn the nuances, the discretion, the subjective judgment, using your opinions about what you think is going to happen as a result of your applied experience to help you make trading decisions in the moment that are contextually appropriate, instead of just looking at a black and white chart and saying, the candlestick painted a bullish engulfing pattern after a close of the 1-hour candle at the 4-hour support zone with the daily chart candle showing a wick. Like, right, it just becomes really hard to duplicate that. If you can keep things really, really simple, it makes trading a lot more fun. The second thing that I think really helped me a lot in my trading journey was, surprise, surprise, controlling risk. That made trading a lot more fun because it made me feel more safe and it made me feel like things were more predictable. I don't mean predictable in terms of predicting where price is actually going. I meant predictable in terms of my actual results and outcomes that would occur in my trading. The results of my profitability were way more predictable if I simply found a way to control risk. Some people control risk in a variety of different ways. You can trade one asset with one specific lot size. You can calculate risk per trade using like a position size calculator. I personally do that. I risk anywhere from generally like $3,000 to $10,000 on a trade, depending on kind of the specifics and what the context is. It just depends on the setup, right? I'm using all my experience and intuition over trading the past 8.5 years to help dictate what position sizing I'll use and how much I'll risk on a trade. For you, your risk can be whatever you define it as to be. Say you're trading with $1,000, you can risk $10 per trade. That's 1% of the account. You can risk $50. You can risk $100 per trade. That's 5 to 10% of the account, respectively. Controlling risk allows you to just be able to predict that in most cases, a losing streak is not going to blow your account. A losing streak is not going to blow your account. That's what I meant to say. If you do this, trading becomes less depressing and also less unpredictable and it creates less anxiety. And that's what it did for me. For you, I don't know if this will work, but for most people, I think it should. I just can't make any claims like that. I know this will work for you, but for most people, I think they'll probably feel the same way. It's like, if you look at it in terms of like, I'm controlling risk and I know exactly what I stand to lose in this trade before I even place the trade, that's a pretty comforting thing to know. Like, yeah, it would take 10 trades in a row to blow my account if I was risking 10% per trade. It would take like 15 to 20 trades in a row to blow the account if you're risking only like 5% per trade. Structuring your risk and defining it before you enter a trade gives you way more predictability. And I'm speaking through personal experience, and this is just my opinion. I found that if I'm keeping things simple, then it's way more fun because I don't have to obsess over analysis and I don't have to try to predict where the market's going to go. And I found that when I control risk, I found that it's way more fun as well because I know, like, yeah, if I lose that trade, I've already decided what the risk is, and then I put my stop loss where it needed to go. I set the position size to be a certain size, so if it hits the stop loss, I only lose whatever the predetermined amount of risk is. If you're entering random trades and not defining the risk beforehand, it can work. However, I've just seen a lot more people get profitable and stay profitable by defining what the risk is before they enter a trade. So I'm not saying it's the best way. I'm just saying it's what works for me. And it's what's made trading so much more peaceful, so much more fun. And as I said at the beginning of this video, way more enjoyable. My vote for you is that you'll opt to keep things simple and control risk. I've been saying those two things religiously for like the past 5 years now. Keep things simple and control risk. And there's a lot of other good reasons to keep things simple and control risk. There are a lot of my other videos here on YouTube. But in this video, I wanted to outline how that actually makes trading more enjoyable. Because if trading is not enjoyable, it's going to be very difficult for it to become something that you can proficiently do long term. I personally, let alone all the nuances, I think trading's kind of boring. You're looking at a chart and you're asking yourself if you think it's going to go up or down so that you can buy or sell. I just think that's kind of boring. I had to figure out how to make it fun and make it rewarding for me. And so outside of the monetary benefit, that's amazing. Outside of that, the process of trading has become more fun because I know when I get to a chart, things are very straightforward. If I see a setup there, then I take a trade, and it usually takes me a couple seconds to see whether or not there's a setup there. I don't have to click through a million time frames and spend 30 minutes researching CPI data for a random currency pair, thinking what the central bank interest rate decision is going to be and if that's going to be bullish on that, and then all this crap. I can literally look at a chart and say, oh, it's at support, I'll buy. Or, oh, it's in a downtrend and it's pulled back upwards, so I'm going to enter a sell thinking it's going to go back down and make a lower low. I start most of my trades off with a 1-to-1 risk reward ratio. Most of my trades never even actually hit the stop loss or take profit because those parameters are there sort of just in the case of an emergency. I manage all my trades manually, so that way I can make more on winners than I lose on my losers long term. Now, with this being said, every single year for the past 6 years has been net profitable between trading a bunch of different currency markets. So I trade Forex, I trade cryptocurrency, and I trade stocks. So for all the past 6 years, all the years have been profitable. However, I go through losing streaks just like every other trader. I'll have weeks, I'll even have like a month or two where I'm consecutively just not profitable. And on average, I average about 2 to 3 down months per year if you basket it in, excluding like break-even weeks and profitable weeks, of course. But like that's like a lot of losing months throughout the year, like 2-3 losing months, sometimes even 4 losing months out of the year, but still retaining profitability. The way I do that is because I'm keeping things simple and I'm controlling risk, and trading is something that has become enjoyable for me. It's very easy for me to go and look at a chart and say, yeah, there's either a setup there or no, there's not. There's nothing to trade. By keeping things simple and controlling risk and then starting with like a 1-to-1 risk reward ratio, like say risk $100 to make $100, you're already starting off with a trading approach that specifically 90% of people will not even be able to do. Because it is the case that Forex trading is risky and most people lose money, and you're probably going to continue to lose money because 90% of people lose money. It's just like any other high-level skill set in life, like becoming a doctor, an engineer, an attorney, a billionaire business owner who owns a conglomerate of companies. There are very few people in the world that can operate at a very high-level skill set, and trading is no different. The barrier to entry in something like trading is so low. That's why you see so many people come in and instantly fail because they have no way of approaching it and they don't take it really seriously. If you become a doctor, you have to invest like 12 years of your life to do that. If you want to become an engineer, it's anywhere from 4 to 6 years. If you want to do a bunch of other things that are really high level and make a lot of money doing it, like becoming an attorney, right? You do college, then law school, then you got to get a lot of experience, then you got to build up a business. If you want to do your own practice, it can take 10 to 20 years to get to the point where you're making even just a couple $100,000 per year, let alone millions of dollars per year. If you approach trading as something that you're going to actually take plenty of time to develop the skill set of, then trading can pay you like one of those high-level professions. It can pay you like a high-caliber professional who is an expert in their craft, but 90% of people won't get there. By keeping things simple and controlling risk and literally just starting with a 1-to-1 risk-reward ratio, you are ahead of 90% of other traders, and the reason I say that is because you will roughly win half the trades and lose half the trades, and it will result in a break-even trading strategy. Most people lose money. If you're breaking even, set aside the commissions and fees and swap fees and stuff like that. If you're just breaking even, you're already ahead of 90% of other traders. That's an objective fact. You can look this up on the internet. Depending on which studies you look at and what metrics you use, 90% of people lose money. If you cannot lose money by breaking even, you're already ahead of them. Now, how do you join the small percentage of people who are actually profitable? You simply learn through experience. By keeping things simple and controlling risk, you're having a really good time trading. Things are enjoyable. And then you continue to get better and better at identifying what nuances and subtleties occur on the charts that dictate what decision you should make. You will get to the point where you can look at a chart and you're like, okay, this is an uptrend, but for some reason I feel weird about taking this buy. and I don't know why. I can't explain it. I can't articulate it to you. I can't communicate it to you. It's just a feeling I have that my intuition is giving me based on all the applied experience I've got over the past 8 years trading. And then I elect to stay out of that trade, and then it ends up that if I would have entered, it would have gone sideways for 3 days and then hit the stop loss. So I've just saved myself a bad outcome by simply not taking the trade and using my intuition to keep me out of it. You will find the same thing, likely, if you get profitable trading and if you get a couple years of experience. You'll be able to say, okay, price is at a resistance zone, so technically sells would be like, in the basket to potentially take one of those trades. However, you get a weird feeling. You're like, it's at resistance, yes, but I don't feel good about this trade. And then you won't even be able to explain why. And that's okay. By keeping things simple, controlling risk, starting with the 1-to-1 risk-reward ratio, you're enjoying the process because it's not really that hard to just do those things. There's obviously nuance to it, but it's not really difficult to literally go to a chart and ask yourself, do I think it's going up or down? Okay, if I think it's going to go up, I'll buy. I'll put a stop loss under the recent low, and then I'll just set a target at a 1-to-1 just to start the trade off. That's not that hard to do, especially if you're right half the time and wrong half the time. By learning through experience, you're making the process much more enjoyable. And then that portion of you being able to enjoy trading then will be able to dictate and yield that perhaps in the future you're actually able to end up getting profitable, because trading wasn't this thing that seemed so daunting and so boring and so almost like upsetting, like almost like you're resentful whenever you sit down and look at charts. If that's the way you're feeling, I suggest that you just simply try keeping things simple and controlling risk. And then at the beginning, just start off with a 1-to-1 risk-reward ratio. It just gives you a feel for how the markets are flowing, and it builds your intuition and experience so that in the future, you'll be able to use your discretion to know which trades to not take, which trades to take, and also which trades to get out early, whether it's in profit or loss. You'll be able to say, I think it'd be a good time to get out of this trade now at break even or at a small loss or a smaller profit than originally intended. You're going to learn all that with experience. And you only learn that by keeping things simple and controlling risk. In my opinion, that's the best way to go about it. And the best part is, it makes trading much more enjoyable. If you enjoyed this video, do whatever you want. I also have a free Telegram channel where I literally share all my trades and analysis in. You can join that. It's the first link in the description. And I'll also put a pinned comment below this video so that you can see it there in the comments.